The Nigerian stock market remained under intense pressure on Tuesday, recording its steepest single-day loss in years as sell-offs across major blue-chip counters deepened the bearish sentiment that has dominated the market since the beginning of the week. The sustained wave of profit-taking and portfolio realignment by institutional investors followed the discredit between that has greeted the government's plan to impose capital gains tax from the next January, further weighed on the market performance, pushing the benchmark index and the market capitalization sharply lower. The session opened on a weak note and extended declines throughout the day as investors continued to offload positions in highly capitalized stocks. The sell pressure, driven by renewed interest in fixed income instruments and cautious positioning ahead of a year-end, reflected weak confidence amid rising yields, high inflation, and tight liquidity in the financial system. The industrial goods, banking, and telecommunications sector bore the brunt of sell-off, while heavyweights like Boa Cement, Dangote Cement, MTN Nigeria, as well as Transcorp, Oando, and Custodian closing at or near the daily loss limits. The mood remained broadly negative as market participants adopted a risk-off approach, focusing more on capital preservation. My guest is an investment analyst with Chapel Hill, Denham, Nabila Mohammed. Nabila, thank you so much. It's good to have you on the program.
Good afternoon, Mr. Tolu. Thank you for having me.
Yes, Nabila, it's not a good one for me. You know, breaking that news yesterday on the news or on our bulletin wasn't something too interesting for me. We're talking about 4.6 trillion naira. That's what our market got out of our market yesterday. Like, I just put it very simply so that everyone understands. Tell me what you make of this first, your general understanding of this.
So to start with, yes, you're right. The way you put it, when you said that it was the highest that we've seen in over 5 years. I mean, the second highest happened on the 10th of March, 2020. And we can obviously attribute that to, COVID. And that loss, that daily loss was 4.9% versus the 5.01% that we recorded yesterday. And I believe it's largely as a result of the fact that a lot of investors are not really clear around how the capital gains tax will be applied. Because if we look at the fundamentals of the companies that are listed, we are seeing recovery in some of them, especially the ones that were largely hit by the FX devaluation that happened in the past 2 years. We're seeing recovery in names like MTN. So you will understand that whatever happened yesterday was not necessarily driven by maybe a disclosure by a company or companies that were listed, but largely as a result of the sentiments that have been perceived in the market. And that was what we saw yesterday. Yes, we've seen 2 weeks of sell-offs. In fact, the last week of October, we recorded 0.98% loss. We recorded a 2.99%, that's weekly loss for that last week. And the first week of November also opened, with a 2.99% loss in the index. Now, just recording 5.01% just sort of drove home the fact that we experienced some level of panic selling in the market, and it's as a result of the uncertainty with regards to the application. But I'm very sure that there have been news flows that there are talks that are ongoing, and we've seen some information being released with regards to, how there are certain people that are exempted and how the application would be going forward. I know talks are still ongoing, but because of that information that is in the market currently, intraday, interestingly, we're seeing that savvy investors are buying the dip, like we usually say. They are buying, the lows that were recorded yesterday. They are buying it up because intraday, what we've seen from the market trading, standpoint is that the ASI is already up like 3%. In fact, most of the stocks that lost 10% yesterday, we're seeing them up. We're seeing the likes of MTN back up. Wow. We're seeing the likes of Aradel. Wow. We're seeing the likes of Zenith. We're seeing the likes of UBA. So it's not something that the reaction that we saw yesterday was, largely as a result of how uncertain a lot of investors are. And there was, even though we've seen the bearish sentiments, like I earlier mentioned, prevail over the past 2 weeks, yesterday was just a lot because of how we saw panic selling amidst all these uncertainties with regards to the application of CBT.
That seems to be very good news. But every time we have developments or news like this, the markets react almost immediately. And many will tell you at this time where we have a bit of stability in that market, our currency has been a bit stable and all of that. That takes me to that question of these tax laws. Just on a very lighter note, do you think there was enough of education and understanding? A lot of work was done by Taiwo Oyedele committee, we all know. But we have few weeks to implementation, and now we are having all of this back and forth.
So, I mean, if there is some level of front and back with regards to our information that has been released, it simply tells everyone on the table that is making the decision that there's not enough clarity as to how this will be applied. So in my own view, I believe that there is more that needs to be done with regards to educating and letting everyone know, how this particular tax will be implemented. If it means the committee has to go back to the drawing board to really clearly design how this policy implementation would pan out, I think they should do that, because when they do that, we have already laid the groundwork in terms of foundation, in terms of the macros. Now, we need to make sure that there are supporting policies that will be friendly enough to attract investors. So my point exactly is that if there is a lot of uncertainty and there's a lot of panic in the market, it means that something needs to be done with regards to enlightening the investors properly and letting them understand how it may or may not affect them. And that's what brings me back to the information that, was sort of shared in the market, just letting everyone know that there are talks ongoing with regards to how this particular TGT, the capital gains tax, will be applied, and that has, sort of reduced the fears in terms of from the investor standpoint, and we're seeing, some of them buy the stocks that lost yesterday. So I believe there should be more talking, there should be more education, there should be more clarity for investors to have that, or be rest assured that their money are safe and their gains that they have recorded are not something that will be charged a lot based on the tax that they would start to implement or be implemented from next year.
Brilliant stuff, as always, from Nabila. Sectoral performance is also something that I wanted us to look at. You analyzed, you picked on some of those stocks that did badly yesterday, but generally, as we are moving towards the end of the year, what's your assessment of various sectors, their performance at the Nigerian stock market?
So, I mean, for the industrial, I'd like to divide the market into two. The financial corporates and the non-financial corporates, or the non-bank corporates. So the non-bank corporates, we have the likes of MTN, the consumer goods companies, the industrials, the oil and gas. All those companies have done well. We've seen recovery. We've seen them, improve in terms of their operational efficiency, in terms of revenue generation. All these speak well to the fundamentals of the company. And with the current valuation, that's looking at how the movement in price of those companies that are listed on the market, on the stock exchange, have dipped, I believe that this is the time that investors should take position in fundamentally sound moves. And that recovery, yet to date, the consumer goods index is, the best performing. It's almost over 100% at some point. It was over 100% return year to date. It just speaks to the fact that indeed investors have priced in the recovery that this particular sector has recorded so far in 2025. Now, if we look at the oil and gas space, we've also seen a lot of, acquisitions, a lot of mergers. With the big guys that are listed. We've seen the Seplat MPNU deal. We've seen how it has translated to performance in terms of Seplat. We've also seen Aradel being listed and how it has, done a lot of consolidation with its Renaissance deal. All these are positive news flows that will sustain the earnings of these companies. And I believe investors again should be looking at those stocks, at the end of the year and the position ahead of the new year and whatever rally that would happen or come with it as we go into 2026. Now, if we look at the industrials as well, we're seeing demand pick up, we're seeing volumes, we're seeing innovation on the part of Lafarge. All of these are positive news flows again from the industrial standpoint. In fact, we did see that, these stocks, especially Dansem and WAPCO, recorded new highs in 2025. And it just speaks to how, again, investors rewarded the performance that they recorded throughout 2025. For the banking, yes, we know as we enter into 2026, there's going to most likely be a dovish circle would continue, just as we experienced with the last rate cut from the MPC committee. If that is sustained, it will mean that interest rates will be lower. But then again, they have raised capital, and this capital would have to be deployed to high-yielding assets that would, sustain their earnings trajectory. So all these are positive news. And if we look at the macros now, all the macros, if we continue to see stability in FX, we continue to see a number of policies that are friendly to the investing environment or the operational environment of these businesses, we should see them do better. While I'm painting, a very positive picture, yes, we do not rule out the possibility of what, how this PGT tax would, be implemented. But again, we are seeing that talks are ongoing, and that should positively translate to, some respite in the minds of investors as they go into 2026 and as they position their portfolios ahead of whatever rally that would come with it. Because right now, with the way the prices are depressed, I believe investors should be pitching their tents somewhere because the fundamentals of the companies listed are, remain sound.
Many also added, or analysts also said yesterday, that a bit of the international interference, or should I say geopolitical interference from the United States is also something that have added to the companies gain tax issue which we raised, and these are some of the issues affecting our market. But for me, I don't know, you've already talked about bouncing back. Sustaining this bounce back is what I'm thinking. What do you think is the way forward? Stabilizing our markets. Players, the local traders have been so active in that market. I don't know if they are still as active as they used to be, moving forward as we get to December.
I think we should understand something. The participation of the foreign investors has really come down. In fact, the loss that we recorded in 2020, that is the second highest in the past, 5 years, or 4.9%. Then we had foreign participation as high as close to 45%. But right now we have foreign participation at 24%. It means that we have largely domesticated the participation in the equities market. And that is positive as far as the entire market is concerned, because it means that if there is any external or global shock, that initial reaction that, would come with foreign investors taking flight, going to safety, we may not see that happen. All what happened yesterday was largely domesticated. In fact, the stocks that contributed close to around 60% of the loss that the market recorded, as Dansem, MTM, BUASEM, we understand that it was largely local investors that played a part, and it was because of the panic selling that that we saw those stocks lose. So going forward, in as much as there's going to be a bounce back, like I mentioned, it will be largely dependent on how the companies perform, how the policies that are being implemented are friendly to the investing environment, and how just generally speaking to the disclosures that these companies make. So it's a mix of these two things: the environment that they operate in and the performance of these companies and how it translates to returns for investors. Because information is something that is power, and it's really used to, steer investors in a particular direction, depending on what kind of information that is, whether it's positive or whether it's negative. It will definitely engender some reaction from the part of investors, and that is what would likely happen. So it's not, market is not, a straight line up because of all these things that come in between. So it's something that we would watch out for. But for now, what we have seen and what we know is that the fundamentals still look good, and with prices being depressed, now is the time. There are investors that are for the long term, there are those that are for the short or medium term, and depending on what position an investor stands. Now, for short term, it's the time to enter, and when you enter, you'll be able to take profit at some point when you've realized some gains.
Figures are just coming in now before I let you go, and we'll wrap up with that. 2.61%. The market has bounced back, like you said. This is really good news. At least we'll have a change of headline as we wrap up the bulletin today. Well, a parting shot from you. Moving on, what are your expectations as we move towards the end of the year with regards to markets now focus? Is it time to sell for cash? Is it time to invest more in stocks?
So I mean, like I said again, the optics look good in terms of the fundamentals of the company. We just need clarity with regards to the implementation of the tax. And as far as prices are depressed now, we would see some buying, we see some investors position ahead of the release of the full year results of most of these companies. We saw how MTN surprised us with an interim dividend when they released their results recently. So all this is going to, be in the minds of investors that know that current prices are, good entry points for them to position ahead of what would happen when they release final year results in the first quarter of 2026.
I want to thank you so very much for your time. Always a brilliant and interesting conversation with you as always. Nabila Mohammed is an investment analyst. She works with Chapel Hill Denham. Thank you so much. Kind regards.
Thank you. Thank you for having me.